If you're looking at choosing or hiring a financial planner or advisor, it's really critical you get this right, because if you don't, it can be really just terrible. It can be a terrible experience, and you can get some bad advice and really maybe lose some money too as well. So in this episode, we're going to talk about how to choose a financial planner that works best for you. Coming up. Welcome to the channel where we help you to learn fast so you can become a confident and successful investor. If that sounds interesting to you, hey, do consider hitting that subscribe button. Love to see you checking out some of our other videos. All right, choosing a financial planner or financial advisor, both pretty interchangeable terms. I tell you, I've seen so many people go wrong with this, and it's really unfortunate because this is what I'm talking about, like where you have a face-to-face meetings with people, or you're really working with somebody, you're really relying on them to give you good advice and recommendations. And if that goes south, if that goes wrong, it can just be just awful, and it can really hurt you too as well. So we're going to talk about some real key criteria and steps so you can choose a financial advisor that's going to work for you. So let's start with number one. And number one is the most important one of all. It trumps everything. It's the most important thing, and that is trust. Trust is everything. You're dealing with another human being. You're dealing with somebody who's going to make recommendations for you. You have to trust them. Trust is everything. Now, we'll go through the criteria so you can start picking out some people and start evaluating them. But when you start talking to them and you use some of this criteria when you start evaluating them, you're going to start to learn a little bit more about their perspectives, their philosophy, but also can you trust them? And just keep that in mind throughout the whole process, that you have to be able to trust them. And if you're already working with a financial advisor, or you go with one person and you find you're losing your trust in them, get rid of them. You're the boss. You hired them. Go move to a different place. You can do that. It's just uncomfortable while you're doing it. So you want to do it right the first time. That's why we have the video here. But trust is everything. So number one, really make sure you can trust them, that you feel just good in your gut about them, that yeah, they're making good recommendations, and they're making some key recommendations for me. So another way that you can develop trust, of course, is, are they certified? And when you start looking for somebody, there are certifications out there in terms of, is this financial planner or advisor certified by an independent board or an independent certification body, or maybe the government, whatever it might be. So a lot of times people can get these certifications. You can get them, these online certifications or from wherever, and they're really not worth much, right? There's no verification or anything like that. But then there are some, independent boards and things that are really good as far as really verifying and making sure that somebody is who they say they are, and that they are a certified financial advisor, for example. Look by your country, just look up certification for financial planners in your country. You'll find it in any country. For the United States, for example, where I live, you have the CFP board is a real key one, the Certified Financial Planner Board. And they have I have the link below too, where you can go there and you can verify an individual's CFP certification and their background. It gives you, not a lot, but it gives you a little bit of information on their background. There's like 89,000 different planners in the United States. So all you do is you just type in here your planner that you're looking at, their name, their organization, where city, state, that kind of stuff, and click it through, and it'll give you some information on that planner, that financial planner. So that's a key first step to do. If you're looking at somebody, maybe a friend's recommended somebody to you, you can look at it and say, well, are they CFP board certified? At least in the United States or in other countries with their own certification boards, if they're not at least on the CFP board, I don't think they even qualify, to be honest with you. I don't know how I could trust somebody who's not on the CFP board. By the way, I'm not a financial planner. I don't have people pay me money to give them one-to-one financial advice. I'm an educator. I provide courses to help you learn about investing, for example. But I'm not directly advising you on how to put your money in this insurance product, or to buy this stock, or to withdraw money, whatever it might be. But that's what certified financial planners do. So look at their certifications and use tools like this to see if they're at least meeting these minimum criteria as you're building up that knowledge about them and that trust. Well, let's look at the third big criteria, and which is a really huge one, which is fees. So let's take a moment to talk about fees. And there are different types of fee structures out there. You have flat fees, transaction or load fees, fee for a specific service, and then there's like alternative fees. So let's look at each of these in turn. So a flat fee is where they're looking at a percentage of assets under management, basically. So let's say, okay, with all the money you bring to me, let's say you've got whatever, $10,000 that you want to start a relationship with a financial planner. Maybe you have more, maybe you have $100,000, whatever the amount is. they're going to charge a flat percentage of assets under management over typically like a yearly basis. And it depends on how much you transfer over. If you transfer over, let's say, the equivalent of $10,000, your fee is going to be more higher than if you're transferring over $1 million, right? They have different break levels, and your potential financial advisor will walk you through all those different break points. They should have a spreadsheet or a document that walks you right through it. Typically, it runs anywhere from 1% to 2%, by the way. And again, the more money you invest, the lower that fee would be. So that's one way to do it, is looking at a flat fee. And the nice thing about these flat fees, by the way, and this is where you might hear a concept called fiduciary, which is basically somebody who's not, the idea of fiduciary is that's a financial planner who is looking at your particular interest as opposed to their own interest, which, makes sense, right? That's somebody who doesn't look at your interests, but they're more legally bound by that a little bit, or at least they're pledged to that. And flat fees really kind of do that because they're not getting paid by what products they're recommending, or you could say pushing. They're not getting paid that way. They're getting paid based on the percentage that you've invested in. So thus, if your investments go up in value each year, they'll actually make a little bit more as your portfolio grows over time. Typically around 1% to 2% is that fee. Another fee is transaction fees or load fees. You'll see this on mutual funds, especially where they might charge a load, where just to buy a product, they might charge you 1% to 3% on that amount that you're investing. So if I invested $5,000 in a mutual fund and it has a 1% load, it's going to charge me 1% of that $5,000, which in that case would be $50, right? So I immediately lose that $50. That's the cost of doing that. And that cost goes to the mutual fund company, and a portion of that cost goes to your financial planner. Again, if they're in flat fee, they don't worry about, or shouldn't have that. They shouldn't double dip, doing both. They should either get paid on transactions or they should get paid a flat fee. So that's another way where an advisor could charge you, where they don't charge you a flat fee, they're charging you based on each transaction. Now the challenge with that, as you can probably see, there are a lot of mutual funds that have no loads. A lot of index funds have no loads. It's zero. So you can see the incentive for the financial advisor is like, well, I don't, whatever percentage I get on zero is zero. That's math. So I might want to push or sometimes it's push, or certainly let's be nicer and say they're going to recommend. They're going to recommend funds that might be, a higher, like a 2% or 3% or even more load or transaction fee, because they get paid that way. So that's problematic. So you're seeing a lot more advisors going to the flat fee, but some still also do the transaction fees. So just understand that, and understand the inherent conflict of interest of maybe recommending certain things because they might get paid more on them. So just be aware of that at all times. Again, getting back to trust, right? Also, you might have fees for specific services. You might have advisor who charges a flat fee, but then if you want them, if they do something extra for you, they might charge a fee for that service. Or maybe you don't have, where you haven't transferred your money. This is very common too, where you haven't actually moved money to them, you haven't actually started with them, but you want to pay them to actually do a look at your overall assets. Basically, it's a portfolio analysis is sometimes what they call it. And that's a service. Like, okay, give me all your documents for all your investments, whether it's through your company, like 401k, or whether it's through other things or your independence. Bring it all together to me, and we'll look at your savings, and we'll look at your insurance, and we'll look at your wills. We'll look at everything if you have a will, and we'll look at everything. And then I will give you recommendations and really do a whole plan for you, an overarching plan for you, a financial plan for you. And so that's just a service they would do for you, and they might charge you for that. Sometimes it can be as low as $500. Sometimes it can be $2,000 or more. It's all over the map. In fact, some financial advisors, especially those who are starting out, might do that for you for free, because the idea is they're hopefully going to show how good they are, and then you'll actually transfer money over to them, and then they'll start making their fees that way, either as a flat fee or on each transaction you do. So if you see it where they do it for free, that's the idea. But that's okay. They can maybe do a nice plan for you. The nice thing about when you have that too with these specific plans, or a plan like that, is you can get a feel for that financial advisor's philosophy, how good they are to work with, or recommendations without starting to transfer all your money in. And lastly, a fourth kind of way is looking at like different types of alternative types of financial planners. Whether like whether it's more do-it-yourself and they just give a little bit of advice, or is it more like a robo-advisor, which is not actually a human being, it's actually an algorithm. There's robo-advisor sites. A lot of the big mutual fund companies offer a robo option. A couple of the big companies that were around, really the creators around that are Betterment and Wealthfront. But there are other, I think M1 has one as well. There are other companies out there for robo-advisors. And robo-advisors, that's basically where things automate through an algorithm, and you basically answer some questions, and they determine your risk profile, and then they set up a portfolio for you, and then it's all done through exchange traded funds, and it kind of manages itself. So that's not really what we're really talking about here as far as looking face to face with financial planners, but a lot of times that some of them might offer where they they actually set you up in a more automated type of robo type account, and then they're there for maybe telephone support or a little less support because you're going more through the robo account. So it's kind of a hybrid type thing. But the most common ones are flat fees, where they're charging a percentage, and transaction fees. So take a look at those. And again, we took a little extra time here, but that's very, very important is the fees. So a couple more here to look at. And another thing to look at is, what do you need help with? There are some financial planners, and you can see a list here of all these different weird designations that specialize in certain areas, right? Now, almost everyone does. I'd be shocked if there's a financial planner that doesn't help you with retirement, right? Doesn't plan, saving for retirement. And also, most of them do estate stuff. Now, you might need lawyers and all that actually do the estate legal part, but the financial planner can help you, as far as understanding your estate and maybe hook you up to somebody to help with your will, those type of things. So mostly everyone does that. But then there's like these specialty ones. I didn't even know some of these even existed. There's certified divorce financial analysis, certified financial transitionists, which I don't think transitionist is actually a word, but if you look at it, that's the designation. It's a CEFT, financial transitionist, so help with major life transitions like selling a business, loss of a spouse. In fact, the more around the business is a certified exit planner, which is helping you to sell or exit your business. Chartered special needs consultants helps family with somebody who's caring for special needs. I didn't even know that existed out there, and I have a special needs child, so that would have been very interesting out there. Maybe I would have used a financial advisor or something with that designation. I don't know if they're even around there, but having somebody, like back to that trust again, if somebody maybe has their own special needs child or has a specialty in that area, can be very helpful if you have a that unique thing, like I do, in understanding about special needs trust, and things that are very can be very complicated. Another one, and the last one out there that's very common, is high net worth wealth management specialists, or you might hear them known as wealth management specialists. These are folks looking for the big game, so to speak. People who are going to invest $500,000 to $1 million or more with them is typically for wealth management specialists. So a lot of times you might be talking to somebody and they'd say, well, how much you want to transfer over? Oh, I'm doing great. I got $75,000 I want to transfer. And they're like, that's nice, but we don't deal with you unless you got over $500,000. Go talk to the guy down the hallway. Like, oh, well, thanks a lot. Because everybody starts at different spots. We want to get you to that high net worth. That's the whole idea of the education videos I provide, is to get you there. But understand that people that are financial advisors, there are some that specialize in high net worth folks, or they're called wealth management specialists. So pretty much all of them will do financial planning. They all do retirement and helping you save for retirement and long-term goals. And a financial planner will look at your overall financial health and financial picture, from insurance to other areas as well. First, let's say like a stockbroker who's only buying and selling stocks. Most people don't use a face-to-face or traditional stockbroker. They usually just do it online. But your financial planner can help you with that, and they can also help you to buy and sell stocks too. Take a look at them with the services that they offer. All right, one last part here that's extremely important, really extremely important concept I want you to really understand, maybe as a takeaway here. And understanding that financial advisors, they have to have a lot of knowledge, right? It's not easy. There's a lot of different things going on in the financial world. That's why probably you're seeking out a financial advisor, because it's complex. It can get complex. So they have to have a lot of knowledge and keep up on top of stuff. But successful financial advisors have this other side too. They have to be good at sales and marketing. I mean, they're a small business owner in many cases. They're independent, or they might be part of a larger company. But either way, they're managing their own clients. So not only do they have to know financial world well in many areas of the financial world, from investing to insurance to whatever, annuities, all sorts of stuff that they need to know, but they got to be able to sell it and be able to market it to get clients in. And so you have some financial advisors who are really good at that sales and marketing part. They can bring in clients, but maybe they lack a little bit of the knowledge. Well, that doesn't help us as investors. We'd rather have somebody who's great at knowledge and terrible at the sales and marketing. And if they're good at both, that's good. In fact, your successful advisors are going to be good at both. But the most important part when you're evaluating somebody, are they understanding of what's going on in the financial industry? Do you trust them? And can they explain concepts and things to you in a way that you understand? If you're working with a financial advisor or you're valuing somebody and it just isn't making sense, they're using a lot of acronyms, go find a different person. It's important that you understand what they're talking about because you're the boss. You're the one making decisions. It's your money, it's your life. So just keep that in mind too when you're looking at financial advisors. All right, so there's some criteria, some thoughts to think on. I hope this lesson really helped you. I hope to help you to pick a great financial advisor or financial planner because it can really make a difference, particularly for with some certain special situations. So it can really, really help and maybe give you another voice to another opinion that you can look at. But in the end, it's your opinion that matters. It's your decisions that matters. They just make recommendations. They're your advisor. And hopefully this helped you, pick out a good one. So with that, if you like this video, go hit that like button, hit the subscribe button to see more videos like this and other good information around investing, and check out, and don't forget to subscribe too as well, as far as checking out some other investing videos and more information in the description below as far as other free resources, guides, and some certainly are good comprehensive courses as well. So with that, best of luck in your search for a financial planner or advisor, and best of luck in your investing journey.